Good morning. We'll begin with the new topic of the reading, cash flow statement. We are going to do this as per accounting standard 3. Before we start with cash flow statement, uh, every topic has a background story. If you understand it, then the cash flow statement becomes easy. We should understand before we prepare cash flow statement, the format of preparing, how to report, before learning all those things. When we understand why cash flow statement is required, where are we going to use cash flow statement? We have already done final accounts of companies, right? In the final accounts of companies, we have done how to prepare a P&L account and which one? Balance sheet we have learned. For example, we have done income from operations, then which one? Other incomes, then various expenses we record, we work out which one? Profit before tax. Profit before tax, then we work out earnings per share. Okay. Based on earnings per share, the market price of the shares are determined. If EPS is more, market price will be more. What is EPS? Earnings per share. For every one share, how much the company earns? If the company is earning like 5 rupees, if the shareholder expects about 10% return, he will pay 5.53 divided by what? 10%. Divided by 10%, how much he will pay? 55.3 rupees. He will be ready to pay invest in the share market. Like you invest 55.3, you get 10% return, that is 5.53 like that. Based on earnings per share, the share price can be determined. That is one of the method of determining share price. Based on which one? Earnings per share, you can determine which one? What is the fair price you can pay in the market? So this is how we prepare a financial statement. Incomes and which one? Expenses. We get profit before tax and we pay tax for that. We calculate profit after tax and work out EPS and report to the shareholders. Thereafter, we prepare a balance sheet. We prepare a balance sheet which shows statement of equity and liabilities and which one? Assets and as on a particular date. Today, these are the assets and liabilities. Tomorrow, whether the same assets will be there. For example, fixed assets are there to the extent of 9 lakhs on 31st March. 1st April, if I sell the asset or if I buy new asset, what will happen? It will change. So this balance sheet is like a photograph. On this date, it is so. Next day, it may change. Next day, it may change. This has some limitations. Financial statements has some limitations. For example, is it possible to overstate income? Is it possible to overstate income? Is it possible to overstate my income? Possible. For example, let's assume you are preparing P&L account of Bharadwaj Institute Private Limited. We collected fees for May batch. The coaching class gets completed. The coaching class, let us assume, gets completed on 30th April. On which month? 30th April. Okay. Let us assume 30th April, the class is getting completed. And accounts are closed on 31st March. Accounts are closed on 31st March. Okay. Or let us take it as November batch. Okay. The students joined in February month and paid the fees and paid the whole fees. And the coaching class will get over, let us assume 30th September. Coaching class will get over in 30th September. February month, all students have paid the fees. We are closing the books of accounts on what date? 31st March, we are closing the books of accounts. Let us assume the students are paid to the extent of about 60 lakhs as fees. Now, will I have to include this as income for the current year? Should I have to include this as income for the next year? 31st March, we are closing the accounts, sir. February month itself, all students have paid the fees. 30th September, the coaching class gets over. November batch, it's for the November batch. On 31st March, should I have to record the income or not? If the management wants to overstate income, we can give a clause like once fees is paid, it is not refundable. There is a clause like that, let us assume. Okay, since it is not refundable, I can take it as income for the current year, number one. Number two, let us assume all these students are given recorded class access on day one itself. Okay, so we have given the recorded classes, books, everything. Okay, So fees is collected, I will include as income for which month? 31st March, and I will include how much? 60 lakhs as income. But when the coaching will take place? In this year itself, or next year also it will proceed? Next year also it will proceed. But I'm including the income and overstating the income. What is the proof I will give? Yeah, I collected the income, paid GST for that, etc. Okay, so I will include this as income. When I include extra income, what will happen? Your profit before tax will be high. When profit before tax is high, what will happen? EPS will be high. EPS will be high. Let us assume real EPS is like 5.53 that we had seen in a problem. But because of this extra income 60 lakhs, EPS may become 15 rupees. EPS may become which one? 15 rupees. Based on this, when you fix the share price, 5.53 divided by 10%, 55 rupees. 15 divided by 10%, 150. What is the real market price of the share? 55 rupees. Since I overstated the income, the market price will become what? 150. So sometimes, if you make investment in the share market by looking at the P&L account, okay, you will purchase a share for 150 rupees. You will purchase a share for how much? 150 rupees. After you buy the share, the price will come down. After you invest the money, the price will come down. Why? Because you are just looking at income statement, P&L account, and you are purchasing the shares. Income can be manipulated. Otherwise, if I want to understate the income, what I will do is, I will not record this as an income. I will give the reason. What is the reason I will give? What is the reason I will give? Since it is for November batch, it belongs to next year. The income belongs to what? Next year. I will take 0 as income. I will take which one? 0 as income. But cost of printing the material, cost of online encryptions, etc. and all, I will charge it this year itself. I will not include income, but I will charge what? Expenses. Promotion expenses, maybe like material charges and encryption charges, some faculty charges I will include as expense. If I include as expense, what will happen? PBT will become, or profit will become, I will disclose which profit? Low profit. Real EPS is 5.53, but I will disclose only 4 rupees as EPS. Now what will be the market price? 40 rupees will be the market price. Let us assume you are holding the share. Real market value is 55 rupees, but the market price will fall to 40 rupees. What you will feel? If I hold the share of the company, it will further go down. It will further go down like that. You may sell the shares and come out. After selling shares, the price will go up. Sometimes after purchasing the share, market price comes down. Sometimes after selling the shares, what happens? Market price will go up. Why? Because you looked at the income statement and purchased. Income can be manipulated. Income can be manipulated. Manipulations, whether it happens, yes, without affecting the legal thing. Within the legal framework, they find the loopholes and try to what? Either overstate income or understate income. Overstate expenses or what? Understate expenses. They try to what? Manipulate incomes. And because of that, what gets affected? EPS gets affected, kind of a thing. This will not be even told to auditors, because auditors are auditing based on which one? Information given to them, based on the information available to them, and based on that they give the report. Based on the information and explanation, financial records offered to me, I certify the financial statements are true and fair. Like that, auditors certify. Clear? So it's not possible for the auditors to find out everything and disclose it. Okay. Then balance sheet. I show land and building. I show which one? Land and building, which was purchased about 15 years back in Nungambakam for 1 crore. But what will be the today's market value? Will it be the same 1 crore? Real market value is how much? Maybe 10 crore. Here, if you look at assets minus liabilities and put net worth, that is book value. Market value may be what? Are you preparing balance sheet based on market value or book value? Book value. So book value of the net worth may be different from which one? Market value of net worth. Market value of net worth may be more like this, or it may be what? Low. Or it may be low. Otherwise, your P&L account and the balance sheet. And which one? Balance sheet tells you about the future or past. Simple. Financial accounts, we record history. Record history means transaction happened, after that you pass journal entry. Clear? So last 1 year, what happened, you record. This P&L account and balance sheet, I call it as a rear view mirror. Just while driving, you see the rear view mirror. Clear? Past is glorious. Past is glorious. Okay, by looking at that, can you drive for the future? Can you drive your vehicle by just looking at rear view mirror? If you invest by looking at the rear view mirror, P&L account and balance sheet. Last year it was good. Next year will it be good? May or may not be good. May or may not be what? Good. That's why investment decision should not be taken based on which one? P&L account and balance sheet. You will look into P&L account and balance sheet. We will see the past behavior of the person. Like that, we will see the past behavior of which one? The financial performance. What is the profit? What is the balance sheet for the past 4 or 5 years? You will look into. That is one of the parameter. That is one of the parameter. But how to make investment decisions, how to decide whether the business is run well or not, then you have to read the cash flow statement. You have to read which one? Cash flow statement. How the cash flow statement helps? I'll come to that later. For the purpose of preparing cash flow statement, we classify this into operating activity. Don't copy this. Operating activity. Operating activity means doing business. What do you mean by doing business? Let's assume you're running a textile showroom. What is your operating income? Sale, commissions, sale of products, and which one? Commission by selling certain branded items you may get. Then what is your operating expense? Purchase cost, running cost, salary cost, rent cost, advertisement cost, EB charges, various other charges. See the collections and payments, not accruals. Income statement is prepared on what basis? Accrual basis. But in cash flow statement, cash collected minus what? Cash paid. That is called as which activity? Operating activity. Let us assume a company has operating activity. A Limited has operating inflow of 1000 crores. How much crores? 1000 crores. Which means they collected cash, net cash by running business. How much crores? 1000 crores. Next is investing activity. Investing means purchase and sale of assets. Purchase and which one? Sale of assets. Okay. A Limited has invested about 600 crores. It has minus cash flow, which means they invested. What do you mean by invested? Purchased new land or new building, new machinery. Okay. They increased working capital. They expanded business by spending how much? 600 crores. Next one is called as financing activity. This is to do with liabilities like borrowing or repaying loans, interest payments, dividend payments, issue of shares, redemption of shares, buyback of shares and the money. They used 400 crores. How much? 400 crores. This is for A Limited. This is for which company? A Limited. B Limited also earned 1000 crores and sold some assets for 200 crores. Sold some assets for how much? 200 crores. Unnecessary land, building and all they sold, which they used for repayment of liabilities, which may be interest payment, loan repayment, buyback of shares and the money they used it. That is for which company? B Limited. B Limited. C Limited also earned 1000 crores from operating activity. Okay. Investment activity they made 2000 crores. For that they borrowed. For that they borrowed money. For that they borrowed money 1000 crores. They took a bank loan or issued shares and collected the money. And this operating cash also, business cash also, both are used for which one? Investment. D Limited again made about 1000 crores. It sold assets about 1000 crores. Both are used for repayment of loans, redemption of preference shares, redemption of debentures, taxes and other obligations are paid. E Limited is having a negative cash flow. They sold assets worth 600 crores. How much? 600 crores. And they used for paying interest etc. to the extent of 100 crores. You tell me, which one is the good company, which one is a bad company? Bad company can be which one? E Limited. Why? In business, are you getting cash or losing cash? Losing cash. And for that, what you are doing? You are selling the assets to offset which one? Negative cash flow and pay interest and other obligations. Interest, some other obligations you are paying by just selling the assets. So which company is a bad company? E Limited. But with 1 year cash flow, you cannot decide. Look at 4 or 5 years cash flow. Then based on that, you decide. Is it declining continuously? Or has it happened only in this current year? Just look into the cash flow statement of 4 or 5 years. Okay. Which company is a bad company according to this? E Limited. Because if this situation continues, they will keep selling the assets for meeting out operating cost. Meeting out which cost? To run business, you are selling the assets. It is like to eat food, you are selling your blood. Okay. So that is not good, Which is the best company in this? A Limited, B Limited, C Limited, B Limited, which is the best company in this? C Limited, as he said. It is having aggressive growth. What do you mean by aggressive growth? You used your business cash, you raised extra capital, which may be own money or borrowed money. Both are invested. Both are invested in new assets like land, building, factories and all. Okay. So when you purchase new assets, what will happen? When will you purchase new assets? When there's a new business possible or not possible? In new business, you will earn profit or incur loss. When will you purchase new assets? New land, new building, new machinery, new showrooms, new branches you will put. When? When you expand business. When you expand business, this year we invested like this. Next year, what will happen to the profit? Profit maybe 1,000 crores this year. Next year, it may go to 1,200, 1,300 crores. 20%, 30% increase in profit will be there. So if you invest in C company, if you invest in which company? C company, then your investment will grow in the future. Why? Business expansion takes place that will bring more profit in the future, more revenue, more return, more profit, more share value, more net worth to the shareholders. And A Limited is also a good company. How it is a good company? They earned 1,000 crores, safely invested 60%, 40% is used for dividend payment, interest payment, loan payment and all. B Limited, B Limited, is it a good company? No, it is declining. Why? This year there is a profit, sir. But are you increasing assets or selling assets? You are selling assets and reducing the size of the business by repaying loans or buying back shares, etc. Okay, if you look at this 1,200 crores, maybe buyback of shares. They are buying back shares because they are not finding out new opportunities for doing business. Clear? So if you analyze the cash flow statement, you will understand where the cash comes in, where the cash is invested, how the cash is used for which one, financing activity, like that you will understand. Now by looking at this, you can predict the performance of the company in the future. Of course, P&L account, balance sheet matters, but don't trust that only and make investment. Read extra. What is extra thing you have to read? Cash flow statement. And cash flow statement will help you to identify where you got the money, where you applied that money, where you got the money and what, where you applied the money. It is like some people will get sudden cash flow. Okay, they will spend lavishly. Next year, the cash flow will not be there. What they will do, they will come to a poor condition. They will come to a poor condition. So that can be identified in case of companies also. Yes, this company has a cash flow. This company has borrowed money also. But look at what did they do with the money? They invested. The growth will be better. The growth will be better. Sometimes people think that investing in a high value share is worthless. But according to me, when a share will have higher value, then there's a growth potential. Okay. Then when you invest, the growth will be much better in the future. It will go higher in the future. Let us take MRF share price. What is the face value of share? 10 rupees. What is the market value today? What is the market value? 95,000 rupees. So do you mean to say that if I invest for one share 95,000 rupees, tomorrow I will lose money? No. Whether people are stupid to invest that much? No. The company is performing better. So the share price will keep on going up in the better. Okay. When Reliance was trading at rupees 900, people were telling it is overpriced. No, it is not advisable to invest in the shares. Thereafter, the market price went to 3,000 rupees within 2 years' time because of Geo, because of the new brands, because of the new products like retail distribution, electronics distribution. They ventured into new acquisitions, mergers and acquisitions, etc. and all. Because of that, they generated wealth and the share price became 3,000. Face value of the share is 10 rupees only. Face value of the share is how much? 10 rupees only. So the performance of the share price in the market depends on how much you grow, how much you earn, where you invest money, So decision should not be taken by just looking at which one? Financial statement. Otherwise, it is like looking at salary of a person, like 5 lakhs rupees per month a person is earning. Okay, getting married to a person. How much he earns? 5 lakhs or she earns 5 lakhs. Very good salary. Get married. But you should understand where that salary goes. Let's assume out of 5 lakhs, 4 lakhs he spends in bars, pubs, etc. Okay, lavish spending in cars, lavish spending in travels, okay, this, that, etc. And all, he will not wear 1,000 rupees watch, he will wear only Rolex and the Madri. Okay, so what is the use in getting a salary and cash flow goes for some purpose where the salary stop, that person may not do good, he may be homeless. Clear? So, cash flow statements helps you to identify. Cash flow statements helps you to identify where a business gets money, where that money is used. Is it for investing purpose or which purpose? Financing means, is it for repaying loan or borrowing loan? Is it for paying interest or dividends? Is it for buying back shares and the money? You will be able to understand where the money comes in and where the money goes out. This helps us for a better financial decision. That's why for a company, final accounts includes which one? Income statement. Income statement, then which one? Balance sheet, and which one? Cash flow statement. Cash flow statement is also part of which one? Financial statements. So investment decisions are taken based on which one? Yes, income statement and balance sheet is a base, but cash flow statement is a better base. It's a better base for making what? Decisions with respect to investment. Or analysis will be done in the company by not looking at P&L account. That is last year. Cash flow will tell what the company is going to do in the future. Shareholders meeting, board of directors meeting, they will talk more about which one? Cash flow statements, where they got the cash, where they applied the cash. Start. Now start cash flow statements, accounting standard 3. Income statement is prepared on accrual basis. Accrual basis means due basis. We record salary plus outstanding salary, rent paid minus prepaid rent. Okay. Do you record only cash purchases or credit purchase also? Both we record. Cash sales as well as what? Credit sales. That is what is called as accrual basis. But cash flow statement is prepared based on cash basis. What do you mean by cash basis? Only when there is an inflow or which one? Outflow, it will be recorded. Take up this. I have 2 columns. Let us understand the differences so that we can learn cash flow statement better. In the P&L account, we include certain non-cash items. Example, depreciation, amortization, okay, loss on sale of assets. In cash flow statement, what is included? Only cash items are included. The principle is nominal accounts. What do you mean by nominal accounts? Debit all expenses and losses, credit all incomes and gains. Okay, nominal accounts are, and again we are following matching principle. Matching principle means income for a year will be matched with what? Expense for a period. That is the principle of preparing which one? Income statement. But cash flow statement is based on the principle, is it operating cash flow? Or is it which one? Investing cash flow? Or is it which one? Financing cash flow. Here we are not going to do based on nominal account, real account and personal account. It is based on from where cash comes in, where cash goes out. Operating cash flow means by doing business. Or you can call it a central business activity. What is the purpose of preparing the income statement? To find out which one? Profit or loss, and to show which one? Financial position. Profit or loss through income statement. Financial position is ascertained through which one? Balance sheet. That is a purpose. What is the purpose of preparing cash flow statement? Sources of cash and which one? Application of cash. Where and all you got the money, where and all you applied the money. For example, listen, a company showed a net profit of 300 crores. What is the net profit? 300 crores. But bank balance has an OD of 120 crores. What is the profit as per P&L account? 300 crores. But bank OD is there to the extent of 120 crores. As a common man, without having any commerce knowledge, accounting knowledge, then I will ask question. You said there is a profit, but there is a bank OD. You said you are earning salary, but there is a bank negative balance, like credit card balances are there, loans from friends, etc. is there. Why? I'll ask, I'm an investor coming to the board of directors meeting or shareholders meeting, asking question. The company has said 3,000 crores of profit is there, but it is showing a bank OD. Why it is there? Why it is so? Normal profit means cash. Profit should be there in the form of cash. Why it is not there? You prepare the cash flow statement and tell, yes sir, we earned 300 crores. But look at, we purchased new land, new machinery, we repaid loans, we paid interest, we paid dividend. That cost an OD of how much? 120 crores, which we will pay it in the next 3 months. Okay, so cash flow statement will explain. What it will explain? Where did you got the money? Where did you apply the money? Why the negative cash flow is there? Clear? So, but P&L account will not tell this. P&L account will tell whether the person is dead or alive, profit or loss. That's all. Cash flow statement will tell. If you look at the cash flow statement, from operating activity 300 crores, investment activity, new asset purchased for 500 crores, and we issued shares for that. Okay, for some temporary shortages, we arranged OD to the extent of what? 120 crores like that. When you look at the cash flow, you will get which one? The sources of cash and which one? Application of cash. It will give us better picture. It will give us what? Better picture, because balance sheet tells you the position as on a particular date. Not throughout the year, but cash flow statement will tell you, have you sold assets or purchased assets? Have you made new investments or what? Sold the investments. Have you issued shares or redeemed shares like that? It will give you detailed information. So that is a purpose. Take up this, then we'll proceed. So far, whatever we are doing or whatever we are learning is nothing but why cash flow statement. Why cash flow statement? If you understand why cash flow statement, now your mind will think, oh, this is how I have to prepare, this is how I have to include. Now while preparing cash flow statement, in the statement of cash flow, will you include non-cash item? No. Okay. Will you include estimated amounts, actual inflows and outflows? Actual inflows and outflows. Will you go for nominal account, income and expenditure, or classifying based on the business activities? Classifying based on which one? Business activities. And we want to show inflow and outflow of cash in every activity, operating, investing, and which one? Financing cash flow. Have we taken up this? Shall we? Now we'll proceed with the format of reporting. The format is given by Accounting Standard 3. Before the Accounting Standard 3, what the people used to do is cash book. Clear? What is cash book? Cash account. To balance brought down. All receipts, all payments, you get which one? Closing balance. They will take a Xerox and keep it in the annual statement. Cash flow statement over. What is cash flow statement? It shows which one? Inflow of cash, outflow of cash. Look at opening balance to balance brought down. Debit side has all inflows. Credit side has all outflows. Closing balance is there. Cash flow statement is over. Just Xerox which one? Cash book and attach it in financial statement, that is cash flow statement, like that people used to do. Clear? Now that will not give fruitful information. Why? Debit side you will find all collections. What do you mean by all collections? Sales collections, credit sales collections, commission collection, interest collection, sale of asset. Okay, even interest received, dividend received. Okay, it will be mixed and recorded. It will be mixed and which one? Recorded. Payments also mixed and recorded. But we want it clearly for the business, for the assets, and for equity and liabilities. What is the inflow and outflow? That is why the format is given by what? Accounting standard 3. Start. Are they getting? Format of preparing cash flow statement. Format of preparing cash flow statement. This is for examination point of view also. You will maintain particulars and 2 amount columns. Particulars and what? 2 amount columns. The first amount column is for all the workings. Outer column should show only 3 numbers. What 3 numbers? Net operating, net investing, and net which one? Financing cash flow should be there. No working should be done in the outer column. All the working should be there in what? Plus and minus should be done only in the inner column. Start. What is the first activity? Cash flow from operating activity. Cash flow from which activity? Operating activity. Simple. Cash from operations less tax paid. Take it up along with me, no need to wait. Net amount will be shown in the outer column. The net amount in the outer column can be a positive amount or which amount? Negative amount. This is, we have to learn this separately. How to find out which one? Cash from which activity? Operating activity. There are 2 methods of learning. One is direct method, another one is which one? Indirect method. Both we will learn. 90% of our time we will be spending in learning which one? Cash from which activity? Operating activity. In exam problem also, if it takes 30 minutes time, 20-25 minutes of time you will be spending in which activity? Operating activity, because investment activity is just purchase and sale of assets. Financing activity is nothing but what? Do with liabilities. So we learned that separately also. Second, cash flow from which activity? Cash flow from investing activity, which may be purchase of non-current assets. Purchase of non-current asset, cash outflow will take place. Sale of non-current assets. What do you mean by non-current assets? Plant, machinery, tangible assets, intangible assets, investments, long-term investments, even income from investments, income from non-trade investments or long-term investments. This also, outer column amount can be what? Positive amount or negative amount. See, purchase of non-current asset comes in which activity? Investing activity. Sale of non-current asset will come in which activity? Investing activity. Then what about purchase of current assets? I purchase stock or I collect money from debtors. That will be which activity? Operating activity. That will be which activity? Operating activity. Non-current assets are long-term investment activity. Next, which activity? Cash from which activity? Financing activity. Issue of shares, debentures, bonds, loans. It will cause inflow or outflow. Money inflow will be there. Redemption of shares, debentures, bonds. It will cause inflow or outflow. Outflow. Interest paid, dividend paid. It will cause inflow or outflow. Interest is paid to the finance providers. Dividend is paid to the shareholders. They are also a kind of finance providers. So net amount can be a positive amount or which amount? Negative amount. So like this, we are going to classify and prepare the cash flow statement. 3 activities. As I said earlier, operating activity, investment activity, and which activity? Financing activity. Operating activity is to do with P&L account base. The information we will take it from which account? P&L account. Investment activity is to do with which one? Assets. Balance sheet, assets. This one, cash from financing activity is to do with liabilities. Now here will you take current liabilities? For example, creditors. When you pay creditors, is it financing activity or operating activity? Operating activity. Paying money to creditors is it which activity? Operating activity. Paying money for outstanding expenses, outstanding rent, all those things, which activity? Operating activity. That's why we take only non-current liabilities. Current liabilities will not come. Listen, pay attention. Let's assume 1000 crores positive cash flow is there. We used for investment 700 crores and for interest, dividend payment and all, we used about 150 crores. We used means paid. What is the net balance? 1000 minus 700 minus 150. What is the net balance? 150 net balance will be there. Net balance after all these things will be how much? 150. That is called as here. Because of this, opening balance to closing balance of cash would have increased or reduced. Opening balance, some amount of cash was there. Bank balance was there. After all these things, whether cash balance would have gone up or gone down. Is it a surplus or deficit? Surplus. So it will create increase in which balances? Cash and bank balances. So net answer will be net change in cash and cash equivalents. Cash and cash equivalent means cash and cash bank balances. Again, it can be a increase or which one? Decrease. In this example, it is increase in cash balance. Suppose if you would have spent about 900 crores over here, 1000 minus 900 minus 150, what would have happened? Minus 50, it would have decreased. Opening balance to closing balance, it would have decreased. With this, if you add opening cash and cash equivalents, nothing but cash and bank balance. If you add which one? Opening cash and cash equivalents, you will get which one? Closing cash and cash equivalents. That means at the end of the year. So net change in cash and cash equivalents. With that, at the beginning of the year, what was the cash and bank balance? If we add, you will get which one? Closing cash and cash equivalents. So what is the first activity? Operating activity, CFO after tax. What is the second activity? Investing activity, purchase and sale of assets, income from non-trade investments. What is the third activity? Financing activity, to do with liabilities. Then net change in cash and cash equivalents. With that, if you add opening balance of cash and cash equivalents, you will get which one? closing balance of cash and cash equivalent. What do you mean by cash and cash equivalents? Cash balance, bank balance, drafts in hand, deposited in bank but not realized on the Mari. Then short-term investments, very short-term investments having 3 months maturity. Short-term investments having how many months maturity? 3 months maturity. That is also equal to cash. Clear? Some companies keeping idle money in current account, no return will be there. So what they will do is they will make short-term investments so that they get some return out of the idle funds. So they are also part of which one? Cash equivalents. Now we'll start to learn about which activity. There is nothing to learn about second and third part. There is nothing to learn about which part? Second and third part. You can identify purchase of assets, sale of assets, you can identify. Issue of shares, redemption of shares, you can identify, because you will be given last year balance sheet, current year balance sheet. Based on that, you will be able to what? Identify. The first one will take a lot of time. What is the first one? Start. Cash from operating activity. There are two methods of working out. One is called as direct method. Direct method is very simple. Take operating receipts. Take which one? Operating receipts less operating payments. Operating receipts minus which one? Operating payments. It will give us cash from operation. Listen to it, then you can copy. I'll give you time to copy. Pay attention. What do you mean by operating receipts? I told you, receipt from central business activity. Receipt from which one? Central business activity. For example, you are running a, as I told you, you are running a textile showroom. What and all will be your operating receipts? Cash sales. And which one? Collection from debtors. If you have a credit sales, collection from which one? Debtors will be there. Then trading commissions. Trading commission received, not accrued. Accrued will be taken in which account? P&L account. Only receipt will be taken over here. Okay, let us assume during COVID or during certain shutdowns, you lost your business. Government gives some compensation for that, subsidy for that. So government subsidy also. Revenue subsidy. Capital subsidy is to purchase assets. Revenue subsidy is to run business. For example, if you're running a handloom, man-made work, like Kanchipuram silk sarees and the Mari, the government gives which one? Subsidy. Labor cost is 50,000. Government will give a subsidy for the labor cost of 10,000, 20,000 and the Mari. So the government subsidy, revenue subsidies will be taken over here. So all the operating receipts will be added. Less. What are all operating expenses? Example of operating expenses. Purchase, will you take all purchases? Cash purchases and paid to whom? Creditors. You will not take credit purchases. Paid to creditors. Then direct expenses paid. What do you mean by direct expenses? We have done branch account. Direct expenses. What do you mean by direct expenses? Wages. Carriage inwards. Then manufacturing expenses paid, freight octroi paid, purchase tax paid, all those things. Only what should be taken? Paid should be taken. It can be current year expense, advance expense, outstanding expense, anything paid only will be what? Taken. Then operating expenses paid. Operating expenses paid. What do you mean by operating expenses? Indirect expenses. Example of indirect expenses. Salary, rent, advertising, printing and stationery, electricity. Name any other expenses to run business. Take all operating expenses paid. You will get CFO. CFO. Okay, I'll go for the next page. That's better. If we do this, it is called as CFO before extraordinary items. CFO before operating receipts. You just add minus which one? Operating payments. You will get which one? Cash before CFO before which items? Extraordinary item. Sir, what do you mean by extraordinary item? Extraordinary item should not happen in the business. If it happens, it will result in heavy inflow or outflow. What do you mean by heavy inflow or outflow? For example, you have taken a building insurance. Okay. The neighborhood tried new construction. Because of that, your building collapsed. What will he do? What will he get? You will get insurance compensation. You will get which one? Insurance compensation. Otherwise, your factory, there was a communal clash. Two caste, two religion, or two people clashed in the local area. They will not fight. They will burn the nearby factory. Okay. So let us assume your factory got burnt because of the communal clash, a riot, and the mari, flood and the mari reasons. Now, will you be able to start the factory tomorrow? No, you will get which one? Compensation. You will get which one? Compensation. They are called as which items? Extraordinary items. Extraordinary items will not happen in normal course of business. Okay. If it happens, it will create a major impact. What do you mean by major impact? Either business will be stopped or closed, or the business will be continued depending upon inflow and outflow. Inflow and which one? Outflow. For example, in your factory, there was a pollution control equipment. On a particular day, it malfunctioned. Okay, the fumes, toxic gases went without, for example, that emission restrictions. In the local area, people suffered. One major accident happened, 20, 30 years back. Bhopal earthquake, not the gas leak disaster, right? So even government of India had a fund, okay, where people contributed for the rehabilitation of the people. So what will happen? The company will be asked to pay the fine, just like that, you do whatever you want. You will have to pay what? Heavy fines. You have to pay which one? Heavy fines. They are called as which items? Extraordinary items. What do you mean by extraordinary items? That will not happen in regular course of business, normal course of business. See, profit on sale of asset, loss on sale of asset and all, is it ordinary or extraordinary? It is ordinary, exceptional, but not extraordinary. But not which one? Extraordinary. Extraordinary items should not happen. If it happens, it will create what? Major impact. This can be a positive amount or negative amount. If you get compensation, it is positive amount. If you pay compensation, it is a negative amount. This will give us cash from operation, CFO before tax. CFO before tax less tax paid. Less tax paid will give us which one? CFO after tax. CFO after tax. So this is what? This is which method? Direct method. Directly you take receipts, less payments, CFO before extraordinary item, minus tax paid. Tax paid you will take, not provided. In financial statements, while preparing final accounts, do you take tax paid or tax provided? Tax in here, will you take provision for tax or tax paid? We'll take provision for tax, that is nothing but what? Estimated tax. But in cash flow, we will not take this. Cash flow only when you pay the money, it will be taken. It can be advance tax, or it can be current year tax, arrears of tax, any tax paid, that will be taken as which one? Tax paid here. Only payment made for tax will come. See, provisions we will create, but tax we will pay when we file income tax returns in the next year. So tax paid only should be taken in which statement? Cash flow statement. That is what is the first part. So this is what is the first part. We worked out under which method? Direct method. Take it up. For the second and third, there is no method. Directly you work out received and it is collected, paid for purchase of assets, sold and realized on the mark. Okay. Indirect method, we learn it separate. Based on direct method, we'll work out some questions for this cash from operating activity. Then after doing one or two problems under direct method, then we'll come for which method? Indirect method. So do you understand why do we prepare cash flow statement? To find out where cash comes in, cash goes out, and the money sources and application of cash. While preparing cash flow statement, we'll consider only collected and which one? Paid. Cash basis we are going to record. The classification is not based on capital expenditure, revenue expenditure. It is based on which one? Operating item, investing item, and which one? Financing items. So first what we are learning? Cash from operating activity. The first part we are learning under which method? Direct method. Shall we proceed பண்ணலாமா? Copy பண்ணிட்டீங்களா? Come to your material. Read question number 1. Read question number 1. Understand question number 1. Cash sales, where it will come? Operating or non-operating? Operating plus or minus? Plus cash inflow plus then cash purchases minus receipt from customers, operating activity inflow. What is the next one? Cash paid to suppliers. Cash paid to suppliers minus trading commission. Is it credit or debit? Credit கொடுத்திருக்காங்க, so என்ன பண்ணணும்? Add பண்ணணும். Credit கொடுத்திருக்காங்க, add பண்ணணும். Then commission debit is an expense, so minus. Wages and salaries paid கொடுத்திருக்காங்க, so minus. Manufacturing overheads paid minus. Administrative overheads paid minus. Selling overheads paid minus. Income tax paid will come at the end. CFO before tax minus what? Tax paid, like that we will take it. Then insurance proceeds received, we can take it as which one? Extraordinary item. We can take it as extraordinary item inflow. Income tax refund, we can net it off with this. 1,18,000 minus 3,000. What is the net tax paid? 1,15,000 is the net tax paid. While doing tax paid, we can take the net tax paid. We can take which one? Net tax paid. Rent paid is an operating expense. Is an operating expense. Try பண்ணுங்க. So receipts minus payments போட்டு try பண்ணுங்க. What and all will come? Cash sales then. How much? Then received. Then that insurance proceeds will come in extraordinary items. Any other thing? Less operating payments. What are all operating payments? Cash purchases how much? 50,000. Then cash paid to suppliers 1 lakh. Then commission paid 20,000.
45,000.
Then wages and salaries paid
40,000.
40,000. Then manufacturing overheads
30,000.
30,000. Then office and administrative overheads
20,000.
20,000. Then
Selling and distribution overhead
how much?
10,000.
Next. Rent paid how much?
10,000.
Then this is called a CFO before which one? CFO before extraordinary items. Less, or sorry, add insurance proceeds received. CFO before tax 5,15,000 less net tax paid. Out of 1,18,000, how much is refunded? 3,000 refunded, means how much is paid? 1,15,000. This will give us CFO after tax. This is what will be taken in the first activity. Cash from operating activity. How much in this question? 4 lakhs. Any doubt in it? It's a basic problem, so no doubt will come. And don't expect in exam, professional exams, especially this question, they will not give you all receipts and payments or code. Receipts, payments, answer over. 20 marks, don't expect. Okay. So don't even expect this in the exam. Go to question number 2. This is just to understand operating activity inflow minus outflow. Extraordinary items you have to adjust and work out which one. CFO before tax, after tax we have to work out. Just to understand the format of preparation. Go to question number 2. What they have given to us? P&L account for the year ending 31st March 2023 they have given. Opening stock, purchases, office expenses, discount allowed. Discount allowed is a cash item or non-cash item? Bad debts, depreciation, provision for tax, various things are given to us. Discount received is given to us. They have given details about cash purchases, credit purchases and returns. Cash plus credit purchases minus returns is what is called as which purchases? Net purchases. Same way, net sales. They have given which one? Cash sales plus credit sales minus returns they have given. They have given additional information of which one? Debtors and creditors at the beginning of the year, end of the year. Outstanding expenses and prepaid expenses at the beginning of the year and which one? End of the year. Accrued means earned but not received. Earned but not received. Accrued trading commission at the beginning, end of the year. Received in advance. Provision for tax they have given. They ask you to find out cash from which activity? Operating activity using which method? Direct method. Indirect method we read to learn. Let us solve it using which method? Direct method. But before we start the answer like this, operating receipts minus which one? Payments. What and all we require? What we need to find out? I got. All these information we have to work out. Cash sales is given to us in the question. Where it is given? Cash sales. How much is given in the question? 40,000. Cash sales 40,000 is given in the question. Receipt from customers means receipt from debtors. Receipt from whom? Debtors. Is it given in the question? Credit sales is given. Will you take credit sales or receipt from customers? This we have to work out. In this question, trading commission is given. Trading commission is given. This is accrued. But we want received. For cash flow statement, what is received we have to work out. Wait. Cash purchases is given in the question? Cash purchases, how much is given in the question? 20,000 is given in the question. We want paid to the suppliers. Paid to the suppliers means paid to the creditors. That is not given, we have to work out. Commission is not given. Then which one? Office expenses. We want which one? Office expenses paid. Office expenses paid. We have to work out. In the problem, what is given is accrued expenses. What do you mean by accrued expenses? Payable for the year. Accrued for the year they have given, but we want how much is paid. We want how much is paid. What about discount allowed, bad debts, depreciation, provision for tax? All these are cash items or non-cash items? That will not come. Even net profit is a non-cash item, that will not come. Discount received, closing stock and all is a non-cash item, that will not come. Rent paid is not given. So this will give us CFO before which item? Extraordinary item. Is there any extraordinary item given in the question? Is there any extraordinary item given in the question? No extraordinary item given in the question. So whatever you work out, it will become which one? CFO before tax. CFO before tax. We want provision for tax or tax paid? Tax paid we want. We have to work out that. If you work out all these things, then you will get which one? CFO after tax. This is for question number 2 under which method? Direct method. Now, before you start this answer, what and all you have to work out? What is the collection from debtors? What is the trading commission received? What is the cash paid to creditors? What is office expenses paid? Net tax paid. This question mark you work out first and tell me. You are going to work out and tell me. Then I'll put it here. Maybe this is our main answer, right? So leave around 10 lines of gap. Leave around 10 lines of gap, 10 to 12 lines of gap. Then start the working note. Be for cash receipt from debtors. You can prepare debtors account or try to find out by any method. No need to prepare ledger. If you can prepare by logical method, you can work out. Working note 1, working note 2, and the madri. Prepare the working notes and tell me. Debtors account 2 balance brought down. 1 lakh. Which sales will come here? Credit sales. Credit sales how much? 1,70,000. Then what and all will come? Bad debts. Branch debtors account and all we have done. What is the bad debts? 4,000. By discount allowed. Don't forget that. How much?
6,000.
6,000. By balance carried down. What is the closing balance given? 2 lakhs. Any sales returns given in the question? Yes, record that also. By sales returns, what is the sales returns? 10,000. As a balancing for cash collection will come. Cash collection from debtors as a balancing for we'll get it. What is the balancing for? 50. Yeah? So that is cash receipt from debtors, 50,000. Prepare the creditors account next. Which account? By balance brought down. What is the opening balance of creditors? 1 lakh. By credit purchases. What is the credit purchases? 80,000. 85,000. Then to discount received. How much?
3,000.
3,000 discount received. Then purchase returns. Purchase returns how much?
5,000.
5,000. Closing balance is given to us. 50. Yeah. As a balancing for you will get cash paid. What is the cash paid? So cash paid to creditors 1,27,000. So we prepared debtors account to find out which one? Cash collection, and we prepared creditors account to find out which one? Cash paid to creditors. Cash paid to creditors we worked out as a balancing figure. What is the next one we have to work out? Trading commission. You want trading commission received. In the P&L account, what is given to us? Accrual amount. Accrual amount means what is earned is given to us. What is earned for the year goes to P&L account. What is given in the P&L account? 1 lakh 2,000. We want received. What is earned is given. We want which one? Received. Now for next 2-3 minutes, pay attention, then you can take it up. Pay attention. Normally, what will you do when the trading commission received is given? How to calculate income? You will add outstanding at the end of the year, nothing but accrued at the end of the year. Accrued at the end of the year. Why? It belongs to current year. It belongs to which year? Current year. Less accrued at the beginning of the year. Why? It belongs to last year. It belongs to which year? Last year. While preparing P&L account, this is what we used to do. Take the income, add receivable for the current year, eliminate receivable for which year? Last year. Add advance received. Advance at the beginning of the year. Why advance at the beginning of the year we add? Last year itself, we received this for which year? Current year. We will add this. Less advance at the end of the year. Why? It belongs to which year? Next year. Otherwise, accrued at the end belongs to current year. Advance at the beginning of the year also belongs to which year? Current year. Include current year income. Eliminate last year and next year income. Eliminate which one? Last year and net year income. And you will take net income to P&L account. Net income to which account? P&L account. Now tell me, what is accrued at the end of the year given? In the question, accrued at the end of the year, how much is given? 2,000. Accrued at the beginning of the year? 1,000. Advance at the beginning of the year? 2,000. Advance at the end of the year? 1,000. Now, are we going to do forward working or reverse working? Forward working, na? Something is received, add 2,000 minus 1,000, add 2,000 minus 1,000. The answer is 1,02,000. The answer is how much? 1,02,000. We are going reverse. We are going which one? Reverse. Wait, pardon. When you do reverse working, do the opposite. 1,02,000. It will become plus 1,000. This will become minus 2,000. This will become plus 1,000 minus 2,000. Just do the opposite. I repeat, we take normally while preparing P&L account trading commission received. Then we add what? Accrued at the end of the year. Why? It's current year income minus accrued at the beginning of the year. belongs to last year. Advance at the beginning of the year. Last year itself, we got the money in advance for which year? Current year. We include it. Advance at the end of the year. Why? It belongs to which year? Next year. We will get what is accrued for the year. In this question, we are given what is accrued. We have to find out what is received. Do opposite. 1,02,000 plus 1,000 minus 2,000 plus 1,000 minus 2,000. We'll get which one? What is received for the year. In this, we'll take what is received for the year. Working note number 3. What is received for the year? 1 lakh. Take up this. Trading commission have they credited or debited? Trading commission they have credited in which account? P&L account, it's an income. Please note it here, it's a reverse working. It is just a reverse working. Now you will understand. After 1 or 2 months when you revise, you should understand. So mention this as a reverse working. Same way we have to work out for office expenses paid. What do we want? Office expenses paid we want. Normally, when office expenses paid is given, what will you do? Add outstanding at the end of the year. Why? Because it belongs to current year. Less outstanding at the beginning of the year. Why? Because it belongs to last year. Add advance or prepaid at the beginning of the year. Why? Because it is paid in the last year itself for current year. Less prepaid at the end of the year. We'll get which one? For P&L account, expenses. This is given to us in the question, P&L account. What is the rent paid, office expenses paid given in the question? 51,000 is given in the question. Now do the reverse working. What is outstanding at the end? 1,000. What is outstanding at the beginning? 500. What is prepaid at the beginning of the year? Beginning of the year? 1,000. End of the year? 500. This also do the reverse working and find out what is paid. So the office expenses paid will come. How much? 50,000. So cash purchases 20,000. Paid to creditors 1,27,000. Office expenses paid how much? 50,000. This will give us CFO before tax. This is not cash from operation, cash outflow, minus 7,000. Answer is what? Minus 7,000. This is cash outflow before tax. Are you getting a positive answer, negative answer? Negative answer means money had gone out. Money had gone out. Next we want tax paid. Which one we need? Tax paid. In the P&L account, are we given provision for tax or tax paid? So let us prepare, listen to it. Provision for tax account. Provision for tax account. Provisions will have which balance? Provisions will have which balance? Credit balance. Provisions created will have credit balance. By balance brought down. Adjustment le paranga. What is the opening balance of provision given? 50,000, 60,000. Opening balance how much? 50,000. Closing balance. To balance carry down. What is given? 60,000 is given in the question. In the P&L account, it is said to provision for tax. It is appearing as to provision for tax. How this will appear in provision for tax account? By P&L account. By P&L account, current year provision. Current year provision. That is given in the P&L account. How much? 40,000. If you tally this, you will get to cash. Nothing but tax paid. Balancing. The balancing for is which one? Tax paid. I repeat, opening balance provision 50,000, closing balance is 60,000. In the P&L account, they have given which provision? Current year provision. If you tally this, you will get which one? Tax paid as a balancing figure. Tax paid minus 30,000. So CFO after taxes 7,000 already minus 30,000. How much? Minus 37,000. No. More than the answer. I request you to pay attention. Look at the P&L account. What is the net profit? If you look at P&L account, whether the company is doing good? Yes. What is the profit? 80,000. But if you look at the cash flow statement, is the company doing good? Are you getting a positive inflow or negative outflow? Negative, yeah. Cash flow is negative. How much you paid? 37,000. You run the business. Okay, profit is booked on accrual basis. Profit is booked on what basis? Accrual basis. But cash flow has not come. Cash flow has not come. You got the cash or lost cash? We lost cash. Oh, that's why reading the cash flow statement will help you to better analyze better which one? The investment decisions. Why it is so? If you look at what is the sales income booked? 2 lakhs. Sales income recorded in P&L account on accrual basis is how much? 2 lakhs. But look at the collections. Cash sales 40,000. Collection from customers. How much you collected? 90,000 only you collected. But you recorded income on accrual basis how much? 2 lakhs we recorded, but we collected only 90,000. Look at the purchases booked. Expense. How much is booked? 1 lakh is charged in P&L account. But look at the payment made. Cash purchases over 20,000. Payment to creditors 1,27,000. How much you paid? Collections have stopped, but you are paying more. Collections are reduced. You are not able to collect money from customers, but you have to pay your suppliers. Why should I pay more? There is an opening balance outstanding. There is an opening balance outstanding for creditors. That you have to pay them. Otherwise, they will take a legal action against you. Okay, so that's why cash paid is more than the purchases. Cash paid is more than the purchases. Cash inflow from sales is less than the actual sales, and cash outflow from purchases are more than what? Actual purchases. That's why you get a negative cash flow. Is the business doing good or bad? Business is not in good shape as of now. Why? Because you're having a negative cash flow. You're having which one? Negative cash flow. That's why reading cash flow statement matters for which decisions? Investment decisions. Take up this. So more than solving the problem, understand the importance of cash flow also. Only then you will get the grip of the chapter. If you just look at it as a ledger account, getting an answer, then you will not understand the real importance, and that answer suddenly will not come. Logical thinking will not come. I repeat the entire process in a minute. Pay attention. Cash sales already given how much? 40,000. Cash purchase already given how much? 20,000. Everything else we work out. Debtors account we prepared to find out which one? Cash collection. Creditors account we prepared to find out cash paid to creditors. Commission received we want. Accrual is given to us. Accrual is given to us. How to do? do reverse working. Then office expenses paid we want. Expenses for the year is given in the P&L account. How to find out? Do the reverse working. Provision for tax. Opening balance 50 given in the adjustment. Closing balance is what? 60. Current year how much of tax you provided? Otherwise 50 plus 40 minus 60. How much of tax is paid? 30,000 paid. Whatever is paid will come in which one? Cash flow statement. So we get cash flow after tax. Otherwise this we can say cash outflow after tax. Take up this. Please remember, we solved this question under which method? Direct method. So first question we were given all receipts and payments. We just worked out CFO. Second question, what do? We find out collections and payments. We find out which one? Collections and payments and record. Please remember, we are not solving a complete cash flow problem. We are working out which one? The first part. What is the first part? Operating activity. And in that we had seen which method? Direct method. In the exam question, they can ask you either direct method or which method? Indirect method. Or other. Are we getting indirect method? What I request is listen to it completely, then you can take it up. Why net profit is not equal to cash? Why this net profit is not equal to cash? Net profit is calculated on accrual basis. It is including both cash as well as what? Non-cash items. Either expense or income, we include both cash as well as non-cash item, collections as well as accrued amounts. That is why net profit is not equal to what? Cash. And sometimes the profits are subject to appropriations. In this question, there is no appropriation. Like we have done, is while preparing final accounts, we used to transfer to proposed dividend, we used to transfer to reserves. Yeah, the net profit will be transferred to which one? Reserves. We have done this. P&L account opening balance, add net profit, we transfer to reserve and arrive at which balance? Closing balance and all we have done. Okay, so the profits are used for transferring to reserves, paying interim dividends and other things. Okay, so because of that also the profit will change. Profit will change. So how to work out? How to work out under indirect method? We are just doing reverse working. We are doing which one? Reverse working. Please listen. Net profit after appropriations. What do you mean by appropriations? Transfer to reserves, all those things. Generally, you can take the closing balance minus opening balance. Closing balance minus which one? Opening balance. Same like our holding company accounts. Then add back all appropriations. Appropriations. What do you mean by appropriations? What do you mean by appropriation? It can be transfer to reserve or it can be dividend payments. Just add back. Why? Because they are not operating expense. They are non-operating expense or operating expense. Non-operating expenses. Add back all non-cash items, non-operating items. Why? Because these are not connected with business or no cash outflow taken place. Like depreciation, loss on sale of assets, interest expenses, amortization. What do you mean by amortization? Amortization of intangible assets. Like goodwill written off, patent written off, those items. Add back all those non-operating items, non-cash items. Eliminate non-operating incomes. Eliminate which one? Non-operating incomes means incomes not connected to our central business activity, credited in P&L account. Example of non-operating incomes: dividend received or rent received or interest received. Interest received, you eliminate it. Why? Because they are not connected to our main business activity. Profit on sale of assets. Profit on sale of assets, you eliminate it. So simple. We take net profit after appropriation, adjust for appropriations, non-cash items, non-operating items, then you will get which one? CFO before tax. CFO before extraordinary item. CFO before extraordinary item. Plus or minus which one? Extraordinary items. You will get CFO before tax. CFO before tax less what? Tax paid. Less tax paid will give us which one? Don't copy this, wait. Less tax paid will give us CFO after tax. It will give us which one? CFO after tax. Wait, don't copy this. Don't copy this. Once again, net profit after appropriation. How to work out? Closing minus opening balance of reserves and surplus. What do you mean by appropriation? If there is a profit, money is set aside for which one? Dividends and reserves. Add back all the non-cash items, non-operating expenses, because these are not connected to which one? Main business activity, or no cash outflow takes place for which one? Depreciation and loss on sale of assets. Eliminate non-operating incomes credited to which account? P&L account. We get CFO before extraordinary item. Adjust for extraordinary items, you get which one? CFO before tax minus tax paid will give us which one? CFO after tax. Wait. Now, what do you mean by working capital? What do you mean by working capital? Money kept for day-to-day operations. Money kept for day-to-day operations. Nothing but current assets. Nothing but which one? Current assets. Current assets less current liabilities. Current assets less current liabilities, we call it as which one? Working capital. Sir, what do you mean by current asset? Money kept in stock, debtors, prepaid expenses, advance payment, cash and bank balances, like that. What do you mean by current liabilities? Short-term obligations payable. Example, creditors, outstanding expenses, things like that. Wait. Let's assume, pay attention. Opening balance, closing balance. Opening balance and closing balance. Pay attention, pay attention. A logical understanding is required before we proceed. Let's assume debtors opening balance was 5 lakhs, closing balance was 2 lakhs. At the beginning of the year, we had how much? 5 lakhs. At the end of the year, how much we are having? 2 lakhs. Because of this, what would have happened? What would have happened to cash? At the beginning of the year, 5 lakhs open debtors receivable was there. At the end of the year, what is the closing balance? 2 lakhs is there. What would have happened to cash? Would have come in or gone out? Debtors balance, if it reduces, what is the meaning? We collected cash or paid cash? We collected cash from our customers. We collected cash from our customers. So when there is a reduction, in current asset, cash comes in or goes out? Cash comes in. That will be adjusted here. So this is called as CFO before working capital adjustment. Working capital adjustment. Then add decrease in current asset. Why are you adding decrease in current asset? Cash comes in. When current asset goes down, we sell the assets and what? Get the cash. And increase in current liabilities. We will add both causes inflow of cash. Both causes which one? Inflow of cash. Let us assume stock at the beginning of the year 1 lakh was there. At the end of the year 3 lakhs is there. 1 lakh at the beginning of the year, end of the year 3 lakhs. Extra stock, how it will come? When you purchase. When you purchase, money will go out. So less what? Decrease in which one? Current assets and increase in this is increase in current assets and which one? Decrease in current liability. For example, current liability, creditors at the beginning of the year was 7,50,000. At the end of the year, we have got 3 lakhs. Creditors going down means you paid money. We paid money. When the money is paid, of course, current liability will decrease. Current liability will what? Decrease. So this working capital adjustment we have to make. This is known as CFO before extraordinary item. Once again, I repeat. Take the net profit after appropriation. Add back all the appropriation because they are not connected to our operating activity. Add back non-cash, non-operating items. Why? Because we want profit or cash flow. Cash flow. Eliminate all the non-operating incomes. Incomes not connected to our main business activity. Sir, dividend, rent, interest received. I am running a textile business. In what way the dividend is connected with my operating activity? What is my operating activity? Manufacturing and selling, buying and selling garments. Dividend received, interest received. Is it my operating income? So eliminated. Profit on sale of assets. Is it my operating income? No, eliminated. So CFO before working capital adjustment. How to adjust for working capital? Decrease in current assets. Why are we adding? When current asset goes down, it is equal to money comes in. When current liability goes up, it is equal to what? Money paid out. Increase in current liability, money comes in. Increase in current liability, more money comes in. So inflow we added. Increase in current asset, like we purchase the asset. When we purchase the asset, money goes out. Decrease in current liability, we pay the money to the creditors, money goes out. So it will give us CFO before extraordinary items. Minus tax paid will give us which one? CFO after tax. Now which question we have solved under direct method? What is the answer we got? 37,000. Same question, let us work out under which method? Indirect method. We should get what? Not different answer. Method can change, but answer should not change. How much you should get? 37,000. Let us work out. Net profit as per P&L account. As per P&L account, what is the net profit given? 80,000. 80,000. Look at the P&L account debit side. Look at the P&L account debit side. You find non-operating expenses, non-cash expenses, you have to add it. Net profit. Provision for tax is not cashing cash outflow. What is actual tax paid? What is actual tax paid? 30,000. Add back the non-cash items. Provision for tax. Provision for tax. How much we provided? 40,000. Actual tax paid will be reduced. Less actual tax paid. What is actual tax paid by us? 30,000. We'll reduce it later on. Why are we adding back provision for tax? It is not a cash item. Real cash outflow is only what? 30,000. Then add back depreciation. Add back which one? Depreciation. Why? Because no cash outflow for that. No cash outflow for that. What is the depreciation given? 19,000. Sir, bad debts and discount is already adjusted with debtors. Bad debts and discounts are already adjusted with debtors in collection. So ignore it. Ignore it. Then ignore bad debts and discounts. Office expenses, purchase and all cash items only. Do you find any non-operating incomes credited in P&L account? Like dividend received, interest received, profit on sale of assets? No such thing. So provision for tax and depreciation we added back. Then no non-operating items. So this will give us which one? CFO before working capital adjustment. CFO before working capital adjustment. Thereafter what we have to do? Add which one? Decrease in current assets, increase in current liability, less what? Less increase in current assets and decrease in which one? Current liability we have to do. That is given. Opening stock. What is opening stock? What is the closing stock? Stock is a current asset, right? Opening stock to closing stock. Increased or decreased? Decreased means it is like sold out. Decrease in stock. Decrease in stock. Current asset decreased. So we have to add how much? 5,000. Next parang. Debtors. Debtors is a current asset or current liability? Current asset. Increased or reduced? Increased, so less. Increase in debtors. What is increase in debtors? 1 lakh. Increase in debtors minus 1 lakh. Then what is the next one? Creditors paranga 1,50,000. Opening balance 1 lakh, closing balance 50,000. Is it a current liability or current asset? Current liability. Increased or reduced? Reduced means we paid the money. Decrease in current liability. Decrease in current liability. Creditors. How much? We paid the money. 50,000. Then what is the next one? Outstanding expenses. Outstanding expenses are liabilities or assets? Liability. Current liability. Is it increased or reduced? Increased. So increase in which one? Outstanding expenses. What is increase in outstanding expenses? 500. Then prepaid office expenses. Prepaid expenses. Asset or liability? Asset. Current asset. Increased or reduced? Prepaid expenses. Opening balance was 1,000. Closing balance is how much? Is it increasing or reducing? So decrease in what? Prepaid expenses. What is the decrease in prepaid expenses? Current asset decreased, so we are adding it. Then accrued trading commission means receivable. Receivable is an asset or liability? Amount receivable. Accrued means earned but not received. Asset or liability? Asset. Asset. Current asset. Is it increased or reduced?
Increase.
So it's a current asset that is increasing. Increase in current assets, what will you do? Less. Increase in accrued trading commission. Increase in current asset. How much? 1,000. Next. What is the next one? Advance trading commission. When you get the money in advance, is it a liability or asset? Liability. Liability has gone up or gone down? Gone down. Current liability goes down. Current liability goes down. What will you do? Less. Decrease in advance trading commission. How much? 1,000. Provision for tax, already we adjusted. Provision for tax, it is adjusted separately. How it is adjusted? We added back current year provision for tax. Current year provision for tax we have added back. Actual tax paid, we will reduce it. So ignore that provision for tax. Ignore which one? That provision for tax. That's all we adjusted. So this should give us CFO before tax. What is the answer we got earlier? Check the answer. Direct method. How much? How much we got? Minus 7,000. We should get the same. Yes. CFO before tax, how much? Minus 7,000. Less actual tax paid, how much? 30,000. So net cash outflow after taxes, how much? Net cash outflow after taxes, how much? 37,000. Net cash flow after taxes, 37,000. I repeat from the beginning, pay attention. Net profit as per P&L account, how much? 80,000. Sir, why are you adding current year provision for tax? Providing tax is not equal to cash outflow. It is a non-cash item we add back. Depreciation, why are we adding back? Non-cash item we add back. Why are we ignoring that bad debts, discount allowed, discount received? Already adjusted in debtors and creditors cash collection, working capital. Then this will give us cash flow before working capital adjustment. Add decrease in current assets. Why are we adding decrease in current asset? When current asset goes down, we sell, collect money. Stock debtors goes down, we collect money. Increase in current liability, why are you adding? Increase in current liability, why are you adding? More liability, more inflow has taken place, more working capital has come in, so we add back. We adjusted. Why are we reducing increase in current assets? Stock goes up, which means we are buying. We are buying. Decrease in current liability, why are you adding? Sorry, why are you reducing? When liability goes down, what is the meaning? We paid the money, we reduce it. So we adjusted, we get CFO before tax. How much we got? 7,000 minus actual tax paid. We prepared an account. What is actual tax paid? 30,000. Cash outflow after tax. Cash outflow after tax is how much? 37,000. This is for question number 2. Under which method? Indirect method. Wait pannunga. If you go for direct method, it takes a lot of time. We have to prepare which account? Debtors account, creditors account, commission received, commission paid, provision for tax account. So many ledger accounts you have to prepare and come to the main answer. If we come for indirect method, simple to work out. How to work out? See the net profit, add back non-operating non-cash items. We'll just get which one? CFO before working capital adjustment. Adjust for working capital. We get which one? CFO before tax. Minus tax paid will give us which one? CFO after tax. So which is simpler to work out? So practical financial reporting. If you look at final accounts of company, cash flow statement, they would have reported under which method? Indirect method. Otherwise, you have to prepare total debtors account, total creditors account, bills payable, bills receivable, so many accruals, so many expenses. We have to adjust and do it. If you go by indirect method, it is very simple. It's very easy also. Practical auditing side and financial reporting side, they follow which method? Indirect method. Examination, they can ask you either direct method or which method? Indirect method. But 90% chance is there, you will get questions under which method? Indirect method. Done? Please remember, we have not learned complete cash flow statement. We learned only operating activity under which method? Direct method and which method? Indirect method. Once this much is learned and understood, cash flow statement learning 80% over. The 20% is quiz in the exam. Okay, where they will not give you closing balance of debtors, or they will not give you opening balance of assets, but they will give you depreciation. You have to do the reverse working and find out. Sometimes they will give you ratios. Last year sales, current year growth. Last year purchases, current year growth. How much percentage of credit is allowed to customers like that? They may give you some complications. Number complications can be given. But concept is only this much. Based on this, we are going to practice questions. And listen, which activity next? Investment activity and financing activity. We can directly identify by just comparing two balance sheets, by just comparing which one? Two balance sheets. For example, uh, look at this machinery. Opening balance, how much was there? 50,000. Closing balance, 46,000. If nothing is given, it is depreciation. It is depreciation. Otherwise, they would have given some sale of assets. Or even we can look at some questions where, for example, opening balance of building is how much? 40,000. Closing balance, 36,000. Is it taken as sale of investment? No. That is given depreciation on building 4,000. So opening balance 40,000, depreciation 4,000, closing balance 36,000. There is no purchase of sale of building. But look at plant. Opening balance how much? 37. Depreciation 4. 37 minus 4. 33 should have been there. But how much is there? 38,000 is there. Now purchase of plant is there. We'll take it in which activity? Purchase of assets. Which activity? Investment activity. Investment purchased 10,000, 18,000. We purchased investment. We'll take it in which activity? That investment activity, financing activity. By comparing two balance sheets, we'll be able to identify. Okay, that is not a learning point that we can easily understand. So what takes time is which activity? Operating activity. Now take up this. Please take up the indirect method, how to work out. Then question number 2, under which method? Indirect method. In the next session also we will practice strongly on which method? Indirect method. Because if you are correct in first part, what is the first part? Operating activity. You will never go wrong in second and third part. So for the first part, we have to practice 3 or 4 questions separately. Which activity? Operating activity only. And one more observation you could have made. Direct method, we take operating receipts minus what? Operating payments. Directly we get. Here we adjust for which one? Non-operating items. Like which one? Appropriations. Then which one we adjust? Non-cash expenses. Non-operating income. I make adjustment for all non-operating items so that you get what? CFO. You understand the logic of adding decrease in current asset? Money comes in. Increase in current liability also money comes in. If current asset goes up, we pay cash and purchase it. Decrease in current liability, we pay it. Money goes out.